Macro traders and investors, here we are in Dime Domenico, and I bring you my institutional vision on global markets. Get ready, because today we are analyzing why Bitcoin and ICP will crush stocks in the next decade. AI, Fed chaos, and your economic survival plan. Buckle up for a game-changing breakdown on how Bitcoin and ICP will outperform the stock market by 2035, driven by Fed chaos and AI's relentless disruption. Data backed by Bitcoin's 38,000 10-year return versus S&P's measly 148% return. Ready for the future economy? Hit like and share, timestamps below, and subscribe for more insider insights. What if the Federal Reserve, guys, next move could make or break your wealth? And what if two digital giants like Bitcoin and the internet computer are about to outshine the entire stock market over the next decade? Today, guys, I am diving deep into expert analysis and unpacking Fed chaos, AI's job killing revolution, and the assets that could secure your financial future for you and your family. And if you're invested for the long haul, this could change everything. Let's jump into it. The Federal Reserve is in turmoil. After the Fed meeting in Jackson Hole, Wyoming, political pressures are pushing for rate cuts, even as inflation climbs and PMIs signal economic expansion. That's a wild departure from history, and I'll explain it to you. Core CPI is slightly above 3%, but flat wage growth and stable gas prices create a paradox. AI's deflationary power is boosting productivity, allowing the Fed to ease rates to support jobs without sparking runaway inflation. But this volatile mix risks social unrest if we don't act fast. And it's the first time we can see in history that if the Fed does cut, they will be cutting, if they don't obviously make it all political, they'll be cutting when the PMI is rising above 50 and at the same time cores above 3. But what is happening? What's causing this? AI, guys. It is reshaping the economy as we speak at lightning speed. But it's hitting the young people the hardest. The data shows a 13% drop in job opportunities for 22 to 25-year-olds in AI vulnerable roles. We are, guys, seeing a K-shaped recovery. Older asset earning folks thrive, while the younger generations drown in student debt and unaffordable housing. Lower interest rates and housing reforms are critical to close the gaps, because without action, inequality could spark unrest. Remember, it's going to go through a difficult period, but AI benefits will eventually shine the economy, probably 5 to 7 years' time or so. But the adjustments of getting there, that period, will be brutal for many. In the chaotic landscape, Bitcoin isn't just an investment, it is a belief in digital scarcity. Its finite supply makes it a safe haven as AI disrupts big tech giants like the Mag 7, shrinking equity returns, which we're going to see in the stock market. Equity returns in traditional markets are going to shrink. But here's the kicker: the World Computer ICP is another game changer. This blockchain powers decentralized computing, integrated AI, and fusing with Bitcoin and Ethereum for scalable dApps. With Bitcoin Fire, both are poised to crush the stock market over the next 10 years. And let's break down the data why. Bitcoin's 10-year return from 2015 to 2025, 38,000% versus S&P's return of 148%. We're talking about a compound annual growth rate for Bitcoin of around 90% compared to S&P of around 10%. There's no comparison. So then we can look at Bitcoin's average 155% annual returns over the past 5 years versus gold's 7%. And as projections, we can say Michael Saylor from MicroStrategy predicts a Bitcoin price of around 1 million plus by 2030 due to supply shocks. Then there's also other key figures like Anthony Scaramucci from SkyBridge that sees Bitcoin close to 200K by 2026. And then I can also see potential forecast with ICP of hitting 55 to 87 by 2030. This is according from CoinCodex and InvestingHaven, with AI adoption and decentralized cloud tech, potentially 10x from current $5 levels. Not financial advice, but I believe it's going to explode further than that by 2030. But even if it's 87 by 2030, looking at that multiple returns, that would outperform the traditional market or the traditional S&P market by far. But why outperform stocks? Bitcoin and ICP, they both thrive on scarcity. Institutional adoption, example ETFs, and AI synergies, while stocks face disruptions and bond yield risks. Tokenization via ICP opens new investing doors, while Bitcoin diversifies beyond fading bonds. Over the next decade, these assets could dominate the S&P 500 by riding global adoption and tech innovation. Housing affordability is make or break. Lower rates are essential to ease burdens on younger generations or risk social unrest. Meanwhile, public equity markets are shrinking as innovative companies stay private longer. Tokenization powered by platforms like ICP could democratize access to these private returns, challenging the S&P's dominance. Traditional bonds, they're losing their diversifier edge. Adding to ICP strength is its 2025 collaboration with Hedera Hashgraph, announced in January by the Hashgraph Association and the Definity Foundation. This partnership, guys, merges Hedera's efficient, sustainable consensus for institutional grade real-world assets with ICP scalable smart contracts and interoperability features. The results enhanced tokenized capabilities that boost liquidity, compliance, and cross-chain functionality for real-world assets like real estate, bonds, and commodities. These guys are going to drive markets. By combining forces, ICP and Hedera enable more secure, efficient RWA ecosystems, accelerating adoption, unlocking trillions in value through seamless green blockchain solutions. Forget heavy bond reliance. Low yields and debasement risks are real. We are going to go through inflation deleveraging over the next 5 years. And Bitcoin offers unmatched liquidity. ICP brings tech-driven upside. Together, they will drive the new diversification era. For younger folks, master AI skills. Now with no code language on AI, it opens a door of opportunities. Cut social media noise and invest in enduring assets like Bitcoin and ICP to secure your future. Do your own research, not financial advice. We guys are at an economic turning point. AI disruption, Fed turmoil, and a new investment paradigm is here. Embrace Bitcoin and ICP and smart reforms to thrive in the new digital age. We are entering into the fourth industrial revolution. Time is short, and the old rules don't apply here. These assets will endure and grow over the next 5-10 years, giving you a shot in this compressed timeline. That's your roadmap, guys, to conquer the chaos. Bitcoin and ICP will outperform stocks by leaps and bounds. Backed by draw drop in data, what's your next move? Adding these to your portfolio? Drop your thoughts below. Guys, smash that like button if this blew your mind. Subscribe for more weekly insights and hit the bell to stay ahead. Share this with a friend stuck in old school stocks. They need to hear this. Thanks for watching. Let's build wealth together. And in the future economy, let's thrive. Peace out, and I'll see you in the next one.